And I know you've been bullish on Apple for a while, but you are getting more cautious. Tell us why.
So I would say that we've been on both sides of the Apple trade. We've had a downgrade last year when the stock was at 222. We upgraded the stock back at 170 when we saw improving trends back in China. Now, as we look at the services numbers, we do see that although the optics of it suggest that there is an acceleration in the quarter, there is an underlying dynamic within China that the trends got a little worse intra-quarter. So we're a little cautious about that overall deceleration within services, particularly in China.
A little worse. I'm looking at these numbers now, which you cited. Third-party App Store sales went from 23% year over year in April, 19% in May, 5% in June. How do you get better from that? And aren't we looking at more of a structural shift here? I mean, the trade war, if it's all of a sudden resolved, it doesn't mean necessarily that Apple is going to be selling as many iPhones. There are Chinese players who have and will and are stepping in.
No, Deirdre, great question. Look, I think that you have to put it in the broader context of Apple, right? China was growing at about, App Store was growing about 15% last year. This year, 5%. That's about 10-point deceleration in App Store from China specifically, but that's only a third of App Store. And China is. And then when you look at aggregate App Store in the context of overall services, that's only a third. And then services is only 20%. So the net of it is, if you distill it all down, it's only a 1-point headwind to numbers from a services perspective. On the other hand, our indicator from today actually is showing that we have a proprietary indicator built on BAC card data, which is proprietary to the bank, and we have data that's coming from the Taiwanese supply chain. When we aggregate these two, it's actually indicating an uptick in revenue trends for Apple, and that's an inflection. We saw that inflect negatively last year, so it's had a good hit rate of predicting those trends, and we think that it's inflecting higher now.
iPhone is still what directs this company as far as earnings go. You're expecting iPhone units for the June quarter to be down 13%, expecting them to be down 13% again in the September quarter. What does Apple have to do with the new phone in the fall in terms of features, in terms of geographic rollout to reach that 230 and maybe stay there?
Yeah, no, it's a great question, John. Look, we think that Apple has a shot of really driving trade-in program much higher in 2019. They've been very focused on this. We've written extensively about the opportunity here because you got 1 billion install base, 750 million primary users. So even at a 4-year replacement cycle, you're at 187-ish million, which is where consensus is. So effectively, if people are upgrading their phones every 4 years, that's good enough just to meet consensus numbers. So not a whole lot has to be done in 2019. There's 3 new phones coming in. We think there might be a concurrent launch of these phones in September. 2 OLED, 1 LCD, very similar to the lineup except for triple rear camera and some wireless charging features that we think are incremental. So not something that people are going to rush out and buy the phone, but then when you look into 2020, you've got the element of 5G playing in. So I think investors already have written off the 2019 cycle and starting to look forward to 2020 5G.
What's the bull case you would prefer? Pricing in a phone and excitement around a phone next year, or a sustained reacceleration in services? If you could only have one.
Yeah, no, I think I think sustained reacceleration in services is going to be very material to hold a multiple. We think that as the story pivots more and more to a services story, all we need to see is for iPhones to be roughly flat, which is great. Now, cyclically, you'll see upticks when you get 5G. You'll get the lapse of that the following year or the following 2 years. And that's fine. But as long as you are able to drive services growth off of this install base, and we haven't really factored in all the new services that are coming in the fall, I think there's plenty of runway for Apple to drive incremental revenue.
Can you do that ex M&A without a large purchase?
No, that's a great question. Look, I mean, I think the install base monetization, if you look at stats across the board, usually this is 200 million number of people that actually pay for something on the App Store, even though the install base is 1 billion. Right. So you have a lot of runway in terms of capability of people to incrementally pay more for apps, existing apps, as well as increase the number of subscribers that are paying something for Apple. And that number is very in line with if you think about like Netflix subs or other subs like Spotify. So you really have an underlying core 150, 200 million number of people who are willing to pay for some of these services, but I think there's growth over there.
Wamsi, finally, just briefly, since we've been talking about it all morning, talk to us a little bit about the regulatory risk for Apple. Not in the same category as a Facebook or Alphabet, but how do you factor that in if you do at all? And, you know, the App Store certainly under more scrutiny.
Yeah, no, it's a great question, Deirdre. Look, I think that when you look at privacy, I mean, this is one thing we all have to give Tim Cook a lot of kudos for. He's been on the right side of the privacy debate. right from the start, whether it's designing stuff, keeping it on the iPhone, you got the secure login, all the things that they've done with Safari, you guys have reported on it. I mean, this has been really a tremendous difference between Apple and other large cap, mega caps. Now, on the App Store specifically, although it looks like there could be a monopoly and there's some risk around take rates, I would actually argue that the App Store provides a lot of value to its developer community, which is in terms of micropayments, whether it's in terms of the security, whether it's in keeping the iOS updated, and the developer tools. So you really have a great plethora of things that developers are gaining by staying on this platform.
Wow. They pay for it, but yes.
Yes, no, absolutely, Carl. Yeah, they do pay a 30% rate, which drops down to 15 if you're doing subscriptions over the course of a year. But I think that's fair. I think the scrutiny that will come is really going to be more around, is there a risk to that 30% going lower? And we've spoken to a lot of legal experts around this, and the take is that, no, not really. There is enough arguments from an Apple perspective that this is going to be a multi-year debate if it gets challenged.